wonderful speakers who can shed more light. Phil Sydenham, who I know personally, we've met in Calcutta and had tea face-to-face before the COVID days and talked about business opportunities. He would, he's going to talk about in general about UK industry investments opportunities, and also talk about the role that Indian companies can play by being partners to British businesses. Rahul Tabhane, he is going to talk about UKEF. It is a fantastic organization, the oldest such export finance organization in the world, financing British businesses who export. So that includes if you want to buy machinery that is British, that you are using in your business. It also includes services. Just before the official start of the call, I was just getting details because I can see that we use British architecture firms, British furniture designers, British marketing companies for our tea business. There are lots of services that I can personally think of that at this time, especially in the context of COVID-19, all of us have to change our business model. And all of us have to understand, what is the future business model going to look like. So you would probably want to recruit and work with some of the talent that you would find in Britain. Calcutta, West Bengal, Eastern India in general has a long tradition of working alongside British business. And this is an opportunity when the world in some ways is coming closer and is being disrupted at the same time. UKEF provides one of the most important aspects, which is financing at competitive rates. During this time, a lot of our businesses have been disrupted, a lot of our cash flows have been impacted, and you might have growth plans which involve British business, but you wouldn't be able to finance it in normal course. And I think UKEF is a great opportunity. You should look at it. I'm personally interested, other than wearing the hat of FICCI, I'm personally interested in exploring what opportunities there are, as are many of you. Otherwise, we wouldn't have so many participants listening into this. There's been a webinar fatigue for many people, but this is valuable, and that's why we have so many people listening in. So without further ado, invite UKEF and the speakers, and welcome on behalf of FICCI. So I would like Phil to go next if that's what you want. Thank you.
Well, thank you very much, Rudra, Mr. Chatterjee, and delighted to have so many people from the east of India joining here. I have to say I've really enjoyed Rudra's welcome into his offices and the cup of tea that we shared as an example of Eastern Indian hospitality. And I've had great hospitality in all my visits to Calcutta, so it's a real delight to be welcomed virtually again, even if I can't be there in person. And we're very grateful for this opportunity to share with you today some of the opportunities for you with the UK. I want to start by saying that the UK and India have a very strong relationship, especially a growing trade and investment relationship, which delivers both jobs and prosperity in India and as well in the UK. To give you a few statistics, UK-India bilateral trade increased by 9.7% to over £24 billion in the calendar year of 2019. So it's a growing story. And on the other side, UK companies have invested over $28 billion in India since the year 2000. If you look at the investments by Indian companies into the UK, the combined revenue of Indian companies in the last 5 years has actually grown by 87%, so almost double. So really proud of this story on both sides and the way it's gone already. in recent years. But really, this is just the start. We want to do more with you and with businesses across India. And our two prime ministers have the same view very much. They have ambitious plans for our relationship over the next 10 years and beyond. They want to work on expanding the scope of our trading relationship as we leave the EU, working around key building blocks and key themes that work for both sides. In the more immediate term, we are obviously in a very deep crisis, and that is on everyone's minds. And I just want to give a couple of quick examples that UK-India relationship has only become stronger over this time. The government of India, for example, has approved the export of nearly 3 million packets of paracetamol to the UK, which really kept us going on that front. And at this side, a vaccine is being jointly developed between Oxford University and the Serum Institute in Pune, which we hope obviously will have global implications. So there are many opportunities for collaboration right now and long term in the future. I want to start off by saying as well that since I last met Mr. Chatterjee, my role has changed. So I used to be supporting UK companies and Indian companies investing into the UK. I want to say that the door is very much still open for those opportunities, and please do get in touch if you would like to think about setting up an office or expanding in the UK. But for today, our focus is on supporting you with finance and partnerships with UK companies in India and building those collaborations. One of my sectors of focus in my current role is financial services, which I think is a sector which, whatever your own business sector, is relevant for you. And as Mr. Chatterjee mentioned, London is a real centre for that. In fact, I would say that the City of London is really the world's leading internationally focused finance centre. And that has translated to India as well, of course. UK firms have enjoyed a long, successful history in India in banking, insurance, asset management, investment banking. The insurance sector, to take one, particularly relevant at the moment with the current pandemic, that companies make sure they are resilient, they are ready financially to face the unprecedented challenges. And I know the UK insurers working in India have a number of products available to support in that way. In capital markets, London again leads the way. Over the last decade, the London Stock Exchange has raised a staggering $10 trillion in total. And Indian companies themselves have listed bonds worth over £11 billion in the London Stock Exchange. I hope you'll bear with my flitting between currencies. I apologise. And those bonds have taken different forms: Masala bonds, rupee-denominated, dollar-denominated bonds, and also green bonds. And all of those 11 billion in the last 5 years. We're hoping also, if new regulations come through, as announced by the government of India, that companies will start listing shares on the London Stock Exchange and the AIM markets. Also, lastly, to raise another subsector, India's growth story is really attractive to UK institutional investors, and the prime example of that is the UK's development finance institution, the CDC Group. CDC invests more in India than anywhere else in the world, but also UK asset managers are increasingly looking to India's growth story as an opportunity for their own investments. Before I close off, I just want to briefly mention that obviously at the moment we're talking about an economic recovery, we're talking about a real challenge that hits us all. But I think it's important to remember that one of the key themes we were thinking of before this crisis hit, and even more so as we start rebuilding the economy, which is that the biggest long-term challenge facing the world today, from our perspective, is climate change. And as we rebuild, we think this is an opportunity for rebuilding in a green way, in a sustainable way, in a way which is ready for the future and takes account of not just the next 1-2 years, but really what will happen after that. And again, I want to put to you that London is the world's leading finance centre for sustainable finance. And London's ecosystem is particularly ready to support projects which are sustainable, including through products such as green bonds. So please do get in touch with us through the British Deputy High Commission in Calcutta if we can connect you with any of these industries or ideas or help you invest in the UK. And I'll bring to a close here, but briefly talk about UK export finance to introduce my colleague. The UK government plays a direct role in financing and financial services. And we're really proud of UK Export Finance, who have a stated aim to ensure that no viable UK export fails for lack of finance or insurance. So without going into any further detail, and I hope that's not been too long for you to listen to, I will now hand over to Rahul, who is our country head for UK Export Finance, to explain how UK government can directly help finance your partnerships with UK companies.
Thank you, Mr. Chatterjee and FICCI colleagues for organizing this webinar. And thank you, Phil, for that kind introduction. Good evening, everyone. I am Rahul Tabhane, country head for UK Export Finance India. I'm based out of the British Deputy High Commission at Mumbai. And over the last 1.5 years, I have been trying to explore financing opportunities for UKEF in India via promoting UK exports and also providing attractive and innovative financing solutions. Let me just try to share my screen before we get into the presentations.
Rahul, so sorry to interrupt, but I think you're coming through very quietly.
Oh, sorry. Audible now? Is the presentation visible to everyone?
Yes, it is.
Thank you so much. And can you hear me loud and clear?
Yes, perfect.
Thank you so much. Over the course of next 20 odd minutes, I'll present to you what UKEF is as an organization, what our products are, what kind of work we have done in the past, and what precisely we are doing in India, and what is our offer for various Indian stakeholders. So just to give you a brief background, UK Export Finance, it's world's oldest export credit agency with over 100 years of experience. We have been set up just after the First World War to promote interests of British businesses globally by providing financing support. As a UK government department, we work alongside our colleagues from other departments, such as Department for International Trade, HM Treasury, and Department for International Development, and other private commercial lenders and credit insurers to make sure that we support viable UK exports globally. For our work, we have been recognized across several forums. In fact, Global Trade Review, which is a trade association, has recognized our efforts and given us an award of the best export credit agency in the world in last consecutive 3 years. We have also received several awards for our work through various agencies. In fact, this year we have received our awards for our innovative financing structure for wind project in Taiwan and our healthcare support in Oman, to which I'll talk about in detail in further slides. So in terms of our operations and our results for FY 2019-2020, we provided overall $4.4 billion of support across some 69 odd countries, supporting 339 British exporters who were involved in these global projects. We have also connected over 500 UK supply chain companies towards the international opportunities via our supplier phase program that we normally conduct on a regular basis for the international projects that we support. So what essentially is our offer and what do we do? So our financing is available in 60 plus global and local currencies. So apart from hard currencies such as USD, Euro, GBP, Yen, we are also ready to provide financing in local currencies, including Indian rupees. We have a credit appetite to support UK exports to over 200 plus countries. In fact, we have our credit limits marked over these countries, which is again available on our website. And anybody can check at any point in time what is our appetite and what are our basic criterias for support if they are looking at UKEF for financing. Our support is sector agnostic. And I was talking to Mr. Chatterjee that that's one of the myths, that it's only capital goods which get supported by UKEF, which is a myth. But in fact, we can support export of UK services, UK intangibles, such as UK R&D or UK intellectual property. So anything or everything that is getting exported out of UK can be supported by UKEF. Starting 2017, UKEF started expanding globally. And as a part of that effort, we started establishing our international network of export finance representatives, and I am one of them. So like me, I have several colleagues across different markets, and we are trying to increase our strength and international representation to over 20 odd countries, which are now designated as priority countries for us from the business perspective. And obviously, India is one of those priority countries. So what kind of products that we have on offer? So we have divided this into two categories. One is our products for UK exporters or UK companies who are exporting out of UK and are based in UK. And second category of products for overseas buyers, which would be of an interest to most of the audience here. But first, I'll talk about the support for UK companies. So all our products for UK exporters have been designed to protect them against the risk of non-payment from overseas buyer. So such as helping them raise bonds, which are required for export contract assistance, and also fulfilling their working capital requirements, which are basically to ensure that these UK companies can fulfill their overseas contracts, can get paid for the contracts, but also they can bid for this contract to start with. So the products such as bond insurance support, export contract insurance policy, bond working capital, export working capital scheme are something wherein we support UK companies to fulfill their international export contract obligation. We also have a product for overseas investment insurance, wherein we provide an insurance to UK investors globally, wherein if there are any risks related uh, to civil war or expropriation of assets or nationalization in those host countries, almost 80% of this investment amount can be insured by UKEF for this overseas investment assistance. Coming on to our products for overseas companies or buyers for this British goods and services, what we do is we provide long-term facilities, making sure that the buyers of these UK goods and services get benefit from the attractive financing options which come at the back of UK's sovereign credit profile. And the main products that we have for overseas buyers are basically buyers credit facilities, suppliers credit facilities, and direct lending in few cases for which our appetite at the moment is limited, but we can still explore on a case-to-case basis. So I'll talk about in detail for the products that we have for overseas companies. So first is buyer's credit facility. It is nothing but a facility where we provide UK sovereign guarantee to a commercial lender, providing a loan to an overseas buyer for capital goods services or intangibles which are getting purchased from UK companies. So in this particular scenario, the exporter receives the payment upfront because it is considered as a cash contract, and they get out of the picture once they fulfill their obligation towards the overseas buyer, but the buyer then has as an option of extended repayment terms, and these repayment terms can go even as long as 18 years if the project is a clean energy or a renewable project. So between 2 to 18 years is a repayment tenor that can be provided by UKEF for overseas buyers who are looking at purchasing from UK. For this particular facility, the minimum contract value that can be supported is £5 million. So anything over and above 5 million transaction can be supported by UKEF under this particular scheme. And here we always have an option of providing financing not only in foreign currencies but in Indian rupees as well. The second product that we have is a suppliers credit financing facility. This is again very much similar to what we have under buyer's credit structure. I think the main difference here is that the size of transaction here can go below 5 million. And here we can look at providing support for an amount of as low as even £500,000. So anywhere between £500,000 to 5 million, if an overseas buyer is coming to UKEF for financing support, we can look at providing that under the suppliers credit scheme that we have. And a slight variation of the suppliers credit financing is again where there is a payment which is under bills of exchange or promissory notes. We can try to cover that as well. The third option which is available and which we use quite judiciously is a direct lending facility from UK government or UK government treasury. This is basically a fixed rate financing which is provided by UK government for larger ticket projects which are of strategic interest to UK government, but where we also see that there is no private appetite available to provide financing for that project. So maybe the markets in Africa or Southeast Asia, wherein we see that the commercial lenders are hesitant to take a risk on the projects, UKEF can pitch in with the direct lending facility. Again, the terms and the structure of the direct lending is very much similar to the buyer's credit that we offer. The only difference here being that here you do not require a commercial lender. It is a money which is directly coming from UK government. Phil, in his introduction, spoke about COP26, the United Nations Climate Change Conference, and the importance of that for UK as the president of that event. And also on different government levels, how we are trying to make sure that UK comes as a global leader on achieving this clean energy growth and achieving sustainable development goals. So keeping that in mind, the UK government treasury has given us an additional budget of £2 billion to support clean energy projects across the globe. So if you have a project which is in a renewable category, which reduces fuel emissions and which is considered as something which is fulfilling all the right boxes of sustainable development goals given by OECD, World Bank, and IMF, then that is a proposal wherein UKEF can have a favorable consideration and can pitch in with direct lending. So overall, to summarize, what is the UKEF value proposition for overseas companies? So as I mentioned before, we can provide financing in 60 plus global and local currencies. The repayment terms that we can offer are between 2 to 10 years in general. But if it's a renewable or a clean energy project, we can go even up to 18 years. When it's a guarantee-backed scheme, what we provide is 100% unconditional guarantee of UK government to support up to 85% of total contract or project value. So what it means is if you have an export contract or a project contract, which is of, for example, 100 crores, we can support only up to 85 crores out of that, provided there is a minimum 20% UK content available. So if you have a project of 100 crores, in which a minimum of 20 crores are coming from UK. UKEF can provide a financing support for 85 crores out of that 100 crores contract value or project value. Now, this 85% limit is something which is sacrosanct, and this is something which is coming from the OECD global consensus or charter that UK has signed along with other OECD countries. So this is the maximum amount of financing which we can assist for. And for that, the UKEF criteria is minimum 20% UK content, to which I can explain in the next slide. Apart from that, obviously, we have global banking relationships. So over the past 100 years, we have worked with almost every other international bank in the world. We also work in partnership with development financial institutions, multilateral development banks, private equity funds. So in that regard, we can come as a sole financier for a project, but we can also work in jointly in tandem with other global financiers. And obviously the competitive pricing with which UKEF offers, because it comes with the UK's sovereign guarantee, which is credit rated AA globally by S&P and Moody's. Now, to provide all this, and because we at the end of the day are a financial institution which is taking a risk on the project or the borrower, we charge a premium cost. Now, this premium for issuance of our guarantee is one-off upfront payment, and it is separate from the interest which is charged on the loan by commercial lenders. So if we have a financing scheme where UKEF is issuing a UK government guarantee, the premium cost can be paid upfront or can be funded from the loan itself. And the cost of this premium is dependent on basically the risk and the length of the contract, and also the performance and repayment terms. So it is very much dependent on the risk profile of the project or the borrower that we are taking, and the tenor for which we are issuing a UKEF guarantee. So what kind of transaction structures we have supported? So we have been renowned globally as a very innovative ECA who's quite open to ideas and ways of structuring. So we have done even Islamic financing. Recently, we have done Sharia structures in Indonesia. So all the normal modes of project development, like on balance sheet financing or a project financing, is something which is very normal to us. We have done PPP projects. We have provided project line of credit. Our guarantee can also be used in debt capital markets. So it's not only that you can take our guarantee and go to a commercial lender, but you can also go to bond investors in international market. And a couple of airline transactions that we have done in the past, where the airline companies have gone to bond investors globally and raised bonds at the back of UKEF's credit profile. Coming to our eligibility criteria, so obviously the minimum threshold of UK content requirement is 20%. And unfortunately, this is a limit wherein we are a little rigid, and there is very little chance of compromise. So we are always open to transactions which have more than 20% UK content, but anything below 20% is something which is not acceptable. And even if you compare this criteria with several other export credit agencies, you will find that this is the lowest content criteria which has been set by any other global OECD export credit agency. Apart from UK content, as a due diligence exercise, what we also look at environmental, social, and human rights. This is particularly applicable in large ticket projects or contracts where we see a substantial harm or effect to environment, and also if we see that there is a lot of social issue or social angles which are involved, wherein people are getting replaced for the project, or there are other issues. I mean, environmental and social criteria rank very at the very top of our support when we look at evaluating projects. Uh, if we are looking at providing our guarantees, then definitely a commercial lender who's using our guarantee to lend is something who should be acceptable to us. The only criteria when we look at a bank acceptable to us is basically they should be investment grade rated, and they should be aware about how export finance structure works. So as we speak, we are also in the process of finalizing our first transaction with an Indian bank. Just because we haven't closed that transaction yet, I am not privy to disclose the name to you. But just to give you a perspective that while we say that the bank must be acceptable to us, we are also judicious enough to understand that for Indian markets, maybe the Indian companies or Indian borrowers are maybe more comfortable working with Indian banks rather than a foreign bank. Obviously, the sustainable lending rules apply when we look at evaluating our projects. And this is something, even if you look at development financial institutions or IMF or World Bank, they follow the similar guidelines. So we also do the same. Uh, Regarding our cover policy and market risk appetite, so it is readily available on our website. So we have divided the 200 countries into, so we have an overall appetite of 50 billion pounds. So that entire appetite has been divided by our risk colleagues into various markets. And for every country, they have allocated a credit limit. And the limit for India right now is 4 billion pounds. So we are open to look at supporting transactions in India up to that amount. When we talk about UK content, and this is what I was mentioning, that there's a myth that it's only capital goods which are allowed as UK content. So we can also support export of UK services, UK R&D, UK intellectual property, and any other intangible which may have not been covered in the past, but there is a sufficient evidence that it is getting exported out of UK. Then I don't think there is any harm for us to support that. Now, quite often we face this question from companies that when we talk about fulfilling that 20% UK content, and a lot of times the companies who are seeking UKEF support are not aware that what kind of companies and UK supply chain that they can tap to fulfill that 20% criteria. So to address that demand, we have started something called as supplier fairs over the past 7-8 years. And in those years, we have connected globally reputed companies for their large ticket projects with UK supply chain. What we do is we organize it as a one-day matchmaking event wherein we bring a UK supply chain under one room. So we have maybe several cities in UK which are earmarked based on the criteria and the requirement of the companies. Then we hold these one-day events or conferences in those individual cities wherein the buyer or the EPC companies give a presentation about the project and what they intend to buy from UK. And depending on the interest from UK companies, they engage into further one-to-one conversations or meetings. And that is where we try to build in the UK content in the transaction to fulfill our 20% criteria. So there's one case study of the same supplier fair model that we have done. This is for a project in Iraq wherein GE UK and ENCA, which is originally a Turkish EPC contractor, have worked together. So for this particular power project, we arranged the supplier fair wherein almost 187 British SME and MME companies have attended. In that, we have organized almost 104 meetings, and out of those the end result was almost $500 million worth of potential UK content was identified for this project in Iraq, which was eventually financed by UKEF. So what is the application to financing roadmap? So basically, you have to first approach us. You have to give us an idea about what you intend to do, or give us a basic information. What is your export contract or project information? Based on that, we will guide you in what are the options available to you from UKEF. Then we will also confirm the eligibility depending on what is the level of UK content in that project, then what is the amount we can support, in which country that UK export is going. So depending on that, the premium levels can also change. In fact, there may be some more or lesser criteria that we may need to add depending on the host countries where the UK exports are going. Then after that, you have to negotiate the terms with us as well as the commercial lender if it's a guarantee-backed transaction. And then obviously in the end, it's a financing tie-up. So from the global perspective, if I talk about the India operations, so as I mentioned, we have been active in India since last 1.5 years. So our credit appetite in India right now is over £4 billion. In the past, we have worked with the likes of Reliance Industries Limited, Indigo Airlines, Jet Airways, wherein we have supported UK purchase of these companies via several products. So with Reliance Industries, we did a line of credit similar to a buyer's credit structure, wherein we gave them a $300 million financing to support almost 25 different British export contracts for their refinery and petrochemical projects. Similar to that, we have done buyers credit structures with Indigo and Jet Airways for purchase of Airbus aircrafts. So overall, what is our offer for Indian buyers or borrowers? So what essentially we are saying is that we are providing you attractive financing, which is backed by UK government's credit profile. So if I can give you some perspective on that, the current India sovereign rating is triple B minus internationally, whereas the UK government sovereign rating is AA stable. So there is a good 6-7 notches upgrade you get when you are going into a market to get financing on the back of UKEF's guarantee. Then obviously the cost of financing or the interest rate that you get from commercial lenders will substantially reduce because the companies or the buyers in India are basically backed by sovereign ceiling. So no matter how good is the company, because the India sovereign rating is triple B minus, most of the Indian corporates or entities are supposed to be triple B minus or below that. There are very few Indian companies maybe who are having international revenues or who have international exposure are rated above India's sovereign ceiling. Otherwise, I would say 99.99% of Indian corporates fall below triple B minus rating. And that is where UKEF's guarantee comes in very handy because it provides you that credit enhancement support, which helps you to reduce your cost of financing. Again, because of the OECD criteria, we can provide you these guarantees for longer tenures. I spoke about this. We can go anywhere between 2 to 18 years, depending on the type of the project and obviously the requirement of the borrower. We can provide financing in Indian rupees. So, I mean, if you want financing in Indian rupees to purchase your foreign contracts, we are open to do that. It just helps you to reduce your currency hedging requirement, which is mandated by Reserve Bank of India for the entities in India when they are tying up foreign currency financing. Obviously, we are open to structuring. We can do alternative financing options, and you can always come to us and we can advise you on how best we can support you. And finally, obviously, Phil, who is from Department for International Trade. I have my colleagues based out of the High Commission in Kolkata and across various cities. So we have the entire UK government network available to Indian companies who can reach out to us, and we can advise you on how best you can work and trade with UK and how UKEF can support you in the best possible manner. So some of the logos which are given in terms of sectors, this agriculture, renewable energy, healthcare, I mean, these are just for representational purposes. I mean, these are no way our priority projects, as I mentioned, priority sectors. As I mentioned, we are quite sector agnostic, but yes, renewable, healthcare, infrastructure are the necessities of the day today. So if we have any transactions in this particular sector, then obviously they will be rated favorably by us. But as such, we are open to look at transactions across all sectors. Again, the offer for Indian stakeholders, and I kind of tried to divide it across various categories. So what we have in India is basically Indian corporates or private entities. So if this kind of stakeholder set is looking at financing support for your capex or investments in India or anywhere across the globe, and if there is some UK connection, then obviously UKEF can come into picture to provide financing support. Similar to that, we can work with central or state governments or public entities or even the municipalities in India. I mean, if they have any infrastructure or big ticket projects wherein they have a UK company advising them or UK services involved in those projects, we can obviously do sovereign, sub-sovereign financing. Sovereign financing is very much our main business right now in African continent. Then again, the another set is the India-UK trade corridor. I mean, we have, and Phil has mentioned about this, we have almost 800 plus UK companies who are inward investors in UK. And some of these Indian investors in UK are using UK as their base to export globally. I mean, some of the examples I can give is like Tata's or Piramals. They are using UK as their base to export to Latin America or European Union or Africa for that matter. So for such kind of entities, we are very much open to provide working capital or trade finance support to increase their export capacity out of UK. Another model on which we are working, and the GENCA transaction which I spoke about is very much on that line, is that we are ready to work with Indian EPC companies wherein they can involve 20% UK content for their projects in India or anywhere across the globe, and can get benefited out of UKEF financing. Lastly, the Indian financial institutions. So there are a lot of Indian companies in NBFC space who are trying to provide financing to the last mile. So for such kind of companies, if we have some UK content or UK connection, which can be explored to provide them a line of credit, because I mean all these institutions also require a good kind of funding support to maybe do their asset liability mismatch or to provide lucrative financing options to their end customers. So we are open to work with such financial institutions as well. And that was my last slide. So this is our website, gov.uk/export-finance. So if you want any further information, you can explore through this website, or my contact details are also available here, so you can reach out to me and or my colleagues. Finally, thank you so much once again to FICCI, Mr. Chatterjee and colleagues. And
thank you. Thank you, Rahul. This was very interesting, and I'm sure many of the people who are here would want to speak in more detail. So is it possible, before we get into questions, to set up time for one-on-one discussions where, because your options are quite broad, it's like many people would feel that they are relevant, they would apply. And instead of going through some bureaucracy, if it's possible to get like short clarity in 5-minute calls or 10-minute calls, saying yes, you are qualified, this is what we are doing currently, that might have FICCI can help you get 10-15 people for one-on-one calls, which might be helpful. Is it possible?
I would very much appreciate that. And in fact, that is something which I am doing currently on my own via colleagues and also via different commercial channels. So if this is something which you feel is going to benefit your customers, then definitely I'm up for it.
Absolutely. So we'll set that up, and I can tell you, like, whether it is buying goods, taking services from British companies,
Yeah.
or companies, for example, OBT has a subsidiary which is a British company, which is a carpet company. Lakshmi has a subsidiary, the two subsidiaries, a hotel business and a tea business, which are British companies. So there'll be a lot of questions among many people who are in this panel.
Yeah.
But many of these questions may be something that they want to speak directly to you instead of asking in a webinar. So that's great to note. Second point that I'd like to make is, we have done as part of FICCI similar interactions with many other institutions, many other lending institutions, financial institutions. So when you are comparing with CDC, whose name you took, for example, or which is part of British government as well, or other multilateral, other development finance institutions, is there anything, if you say that one of the key differentiators between UKEF and those financial institutions, what would you say it is?
So the differentiation will come in different categories for different comparisons. So if you are comparing UKEF with CDC, so the main comparison is that UKEF is an export finance institution. Sorry, the main difference is UKEF is an export finance institution, whereas CDC is a development finance institution. What we can do is whatever we do on the debt side of the capital structure. We never take equity into the transaction or a project. So whatever we do is either backed by UKEF guarantee, wherein you require a lender, or we fund ourselves. But everything is categorized as debt for the company, which has to be repaid back. Whereas CDC is a development finance institution. They take equity as into the project mainly, or a company, but they also provide debt sometimes. And the main criteria for them is development goals, or global development or sustainable goals, wherein they do not require UK exports or 20% UK content as their main criteria.
Great. We have lots of questions in terms of we got on the chat. May I ask Mr. Ashok Bingani from Gems and Jewelry industry to ask the first question? And following that, I'll just mention the next two names, Mr. Akshar Gupta of Shrey and Mr. Siddhant Kaul of Nico. Mr. Bingani, are you, can someone put him on unmute so that he can ask a question?
Sir, I think he's disconnected. We'll just check with his office again.
So let's ask Mr. Akshar Gupta of Shrey.
Yeah. Hello, good evening, everyone. Sorry, my video is off. There's some problem with the laptop. So
okay, we can hear you clearly.
So I am part of the Shrey Infrastructure and Finance Group. So I am we look after the environmental part of it. We manage the environmental portfolio of Shrey Infrastructure. So we are currently into water and wastewater sector as well as solid waste. So in water and wastewater, sir, we see a lot of funding coming from the UK government as well as UK companies who are venturing into into India using the central government schemes such as Namami Gange and other programs which are there in India. Whereas in municipal solid waste segment, there is no such exposure, like direct exposure route of exposure for the UK companies. So when UKEF says that they can fund, but there is a eligibility criteria to it. So can UKEF also help us arranging the UK companies and venturing into this area and investing as an equity, and then UKEF can help us fund the debt portion of it?
Thank you. Yeah, thank you, Akshan, for that question. So in fact, Shrey Group, we know very well, in fact, at various levels of UKEF and also UK government network, we have quite a sight and relationship across Shrey. I would say that definitely that is one of our jobs, and the supplier fare model, which I spoke to you about, is precisely that we introduce UK companies in particular sector for particular requirement. Also, Phil, who's here, who's part of DIT, We have sector teams who can assist you to find out those relevant companies who you can work with on particular projects in India. And obviously on the UKEF side, we will then can evaluate whether it fits within our criteria of credit risk as well as 20% UK content. Phil, if you want to add anything on that.
Nothing particular to add, but very happy to connect with UK companies who can form part of that supply chain. My colleague Rishi Chanda, who's based in Calcutta, is actually the expert in our team, probably in that sector, the environment sector particularly. So, and he leads our infrastructure work across India. So please do connect with him if you don't have his details or my details. I'll have to share them.
Great. Mr. Siddhant Kaul of NICO, if you can ask the next question.
Hi, Rahul. Hi, Rudra. Thank you. What I wanted to check was, in case there is ongoing activity, as part of a long-standing, maybe trading relationship with a particular UK supplier, is there a simple trade buyer's credit facility that you can facilitate?
Yes, that is very much that we can do. So we can start with simple transaction and we can go into complex transactions as well. So
yeah,
if you have any
pure and simple. So the best way is to email you with details on.
Yeah.
Okay. All
So
right.
Siddhant, what we mentioned is, we can have a short one-on-one discussion.
Yeah, that will be very helpful. Yeah.
And then you can, I can imagine that all of these would have some, idiosyncrasies which would be better dealt, one-on-one instead of the webinar. Sure. So we'll certainly, that will probably be the value addition.
Thank you.
Thank you. Mr. R.K. Chhajar, if you are available, Mr. R.K. Chhajar heads the MSME committee. If you are available, would you like to ask the next question? And
yeah, thanks, Rudra.
Thank you.
Is it necessary that if the finance has to be availed from UKEF, that the certain amount of exports needs to be done to the country if a project finance has been taken?
Yes. As I mentioned, as we are an export finance institution, our mandate is to promote or support UK exports. And for that, the criteria we have kept is 20%. So what we are asking you is not the entire project has to be delivered from UK, but a minimum of 20% of the project cost has to be delivered from UK for us to come into the picture.
Okay. Thanks.
Thank you. Mr. Sudipto Mukherjee, Managing Partner, Alcock Technology Services.
This is Sudipto Mukherjee here. I had a question regarding how does this funding work for the consortium of an Indian and a foreign company, a British company, where we're executing a project in India for the government of India. So do you fund the consortium? There's more than 20% British content in that. That part of it isn't an issue. But the work is in India, and we are in partnership with a British company for doing the work as a consortium. So how does the funding work in that case?
So the back question to that is, who requires the funding? Is it the British company who's seeking funding, or is the government?
The consortium.
The consortium. Okay. So in that case, we will have to look what is the UK interest in the entire consortium, and we can definitely support. But as I mentioned, the support that we provide to the exporters is normally short term and in terms of working capital facilities. So I think it would be great if you can engage on a one-to-one call, if you can give me more details on that, and I can advise you how best we can come into the picture.
Sure. Okay, thank you.
Thank you. I think Mr. Bengani is back from the gems and jewelry industry. If not, would Mr. Sanjeeva Gupta from OBT like to ask the next question?
I will call him directly and ask the question.
Okay, Sure. Mr. Atul Rastogi, would you like to ask the next question?
Good evening.
Good
Rahul,
evening.
I just want to know, we have a company which is based out of Scotland. It's and we are invested money in development projects and the plantations in Africa. So is there any is there an availability of an insurance coverage for our investments in Africa? And the other is that, is the funding available for further investments there?
So yes, very much, because if you have done those investments via your UK subsidiary,
Yes, yes.
then definitely we are able to cover that via our overseas investment insurance policy. Secondly, in terms of your further investments, we will have to look at your proposal on what exactly you plan to achieve, whether in any way it is going to support UK exports further or UK economy as a whole. And once we evaluate that, then definitely there is something that we can do.
Okay.
Thank you. Mr. Rajesh Agarwal, Managing Director, Crystal Logistics, has a question.
Yes, sir. Good afternoon.
Good afternoon.
We are in talks with the company Liverpool. You were trying to acquire that. The due diligence is yet to be completed. So we just wanted to know, we have to take a fund from our own, or you would help us acquire, fund that company, sir?
Okay. If I understand well, you are acquiring a company in UK and you are looking financing for that.
Exactly.
Okay, so this is an aspect where UKEF won't be of any help because our mandate is to promote UK exports. And this is an investment activity into UK. And as per the government rules defined for us by UK, this is something which is beyond our purview. But then we can always guide you to find out who can help you in this kind of activity. So there are ample fund investors, fund managers, commercial lenders who can come and maybe help you on that front. So maybe if you want that kind of advisory support from us, we are ready to do that. But financing per se from UKEF is something which will not be possible for the acquisition.
No, that would be great if you could connect it to some people who would be helping us to finance that.
Sure.
Thank you.
So if you can give us some information, we can.
We'll coordinate from
Yeah.
FICCI.
Very happy
Mr.
to help
J.K.
you.
Rat, who's from the Odisha MSME Committee of FICCI. Mr. Rat, if you have a question.
I think he's got disconnected, sir.
Okay. So Mr. Bengani has asked his question. Mr. Bengani, do you have a question? Okay. Mr. Sanjeev Mohanty from Bhubaneswar, would you like to ask a question?
Mr. Rudra, can I speak? Bengani here.
Yes, please ask your question.
Thank you, sir. Well, this is, we look forward if any of the jeweler from UK want to join Indian jeweler here in India, there's a lot of opportunity to export now from Bengal to around the world. I will look forward for this. If anybody want to join us, we are there to help them. And we have an Ankurati Jaban Jewelry Park, which has been made by government of Bengal. So it will be good enough if anybody will join this. It's an opportunity to the English people as well as to Indian people also to have a good connection with each other. Thank you, sir. Thank you, Mr. Rudra.
Thank you.
Thank you very much. If I can take that one, it'd be very interesting to hear more details. The jewelry sector, I think, is one led for us by the UK India Business Council, which is the business body between the UK and India. And if you can send us through the details, we'll make sure it gets to the right person.
Great. So I think we will have to compile the rest of the questions that come our way and send it to both to Rahul and to Phil. And I think setting up some individual sessions would also be useful. You could see there was a lot of interest in the opportunities that UKEF had, and we'd love to carry forward this discussion and make this valuable for FICCI members and also for UKEF. Thank you very much for all of you, especially Rahul and Phil for joining. And I think it was a good session and everybody benefited.
Thank you so
And
much.
Mr. Pingani, I'll connect you to UKIBC. Kevin used to be there, so he's still the CEO. Yeah. We'll connect you. Okay, thank you.
Thank you so much for having us. It's been a
Thanks.
real
We'll
pleasure.
take it forward. Yeah, I'll be in touch with Rishi and we'll take it forward.
Thank
Fantastic.
you. Thank you so much, guys. Thank you. Nice talking to you. Bye.
Thank you so much.
Thank you, Moshe.
Thank you.